Alrighty, guys. Good morning. This morning, March 2nd, 26. And so everything began Saturday or Friday night or Saturday night, sorry, whichever how you want to count the time zones. But the hostilities began in a major way. And not surprising as they do on the weekend, but after markets are closed, we don't have a crazy market reaction. I think that's what we built into it as well. But I think it was some more to it. It was some timing thing going on with those leaders they took out. But overall, though, that conflict is in full swing right now. And as if you haven't paid attention, the yeah, he's talking right now. So it's he's talking right now. And it's if you look at the fallout right now so far, the everything is 100% margin. If you haven't paid attention, if you place it and try to place a trade, you may get rejected if you have not enough money in the account. So far, I haven't gotten any notification that we are back on day trading margins. But so if everything went up to 100% margin in the overnight, especially for oil, I would think that's gonna be a freaking crazy market. And yeah, they gapped up pretty good. They were gapping up all the way up to the $75 mark, and then they backed down all the way down to uh, so, yeah, so I have this is my cap. I just have an F2 on oil, as you can see here. They gapped up. They gapped all the way up here to 75. That's kind of where it started, and it backed off all the way down here to 69. The last prints we have from the close from Friday was 67. So it's not crazy, It's like if they can hold below at 70 or below, I mean that's I mean remember they when everything came to the Strait of Hormuz, that was then oil was down up at $150 in a heartbeat. So right now it's just this a much smaller amount going through there, and it's not at all as important as it used to be, but it still gets the oil market riled because they say there is oil going through there quite a bit, and right now I guess they're trying to shut that strait. But I would expect them to have plans for that, and that they're aggressively has taken out the whole navy. It's going to be a bloodbath. It's going to be ugly, and the Iranians going to find out, you know, that the words matter. So anyway, we're starting off a day with a big question mark, I would say. So we started the Friday's trading. Uh, let me see here. Pull this one up like this. Pull my F1 down. The Friday's trading was pretty much meandering around in the midpoint. We were just back here to that 68, 80, 75 to 80 area. Yes, in a holding pattern. And I've been talking about that potential. The only geopolitical uncertainty is exactly what's going on right now. So now that's going to be off the table. We have it, all right? News this morning, if I go back, we only have at 9:45, we had PMI and then ISM at 10. So 9:45 and 10, we get news. Pay attention to that. But I think the beginning of the morning is going to be all about fallout and how the market reacts to it. Chances are we're going to get the sharp sell-off when the day session kicks in, and there's going to be some pressure to the downside. That would be the reaction. I personally, I'm looking at that as saying, so they've been going at it now for 2 days. The Iranians have been shooting missiles left and right to every to everyone. Everyone has gotten a missile sent their way. And from what I heard, that it's not like the Arab states are sitting on the sidelines. They're upset because they hit their civilian targets in those countries. So they're coalescing around the U.S. and not quite what the Iranians expected. But that's everything is fluid, and I'm thinking in terms of response and fallout. So far, it's pathetic. So I think the Iranians is going to fold pretty quick. They are getting hammered, and if whatever they had, if they couldn't get it done early on here, it's going to get taken out, dismantled, and disappear. So I'm thinking that's going to be a pretty, not pretty quick, but they're going to take care of business there. So it's a lot less retaliation and stuff. The only thing I can see, which is going to be a more politically of an issue at home here, is going to be the potential for local cell attacks and the terrorist attacks in the U.S. on U.S. soil. We'll see how it fans out, but so far I would say the impact on the markets is going to be just flat out volatility, uncertainty, and probably downwards pressure. So that's how we get started today. So we are to the downside. We gapped down. We took it a little bit lower. London session was all the way down here to the 67.70 again, right into that main support area on the F1. And then we're back up here, reverse retesting 68.20s. So we have the levels here, 68.50, 45, 30s, 68.10. I took some of them out from the stuff I had in here from Friday. I believe it was 10, 20, and 30 was pretty good support areas. But right now they just blew through all of that stuff in the overnight, and they're back up again. So I would say that we are reverse retesting that area right now, the 68.10 up to the 68.30s. We are right here and I have that same area as I have on the F1. And I would not be super aggressive on the long side at all. Doesn't mean that we can get some little rallies in between. I would not be surprised about that because it's the market as usual is overreacting, and unless the Iranians really have some teeth and it looks like they're going to fight back and have a protracted fight, I think this whole thing is going to be a big nothing burger in a few weeks. So right now we're just dealing with the volatility and we just have to trade it as such. I'm probably going to sit on the sideline a bit and watch how the market action goes. If it's going to be sloppy volatile, or if it's going to be directional. If it's directional straight down, there yes, a massive sell-off, which very well could happen in the morning. I would be just trying to get short on that and then see how far they want to take it. The only issue with that is trying to get in and stay in. You may have to give it a lot of room on the stop side and put some more exposure on your account because if this swings back, the volatility is crazy. Then depending how what kind of trade location you get, you just have to give it a lot more room. And if you're wrong, you're just going to get smacked in the face. So that's the trade-off. But I will sit on the sidelines for a bit and watch it and see what kind of day we're going to get. Starting off from the short side, expecting weakness. If they start trending up above these 68.50s and the 55s here, the session highs, if they start trending above that, we're back up in this upper range, I would be more inclined to just start off thinking range-bound trading and get back up here. But right now we are down here this lower range. I would expect them to try to take it lower, and there will be that knee-jerk reaction when the algos start kicking in. There's been plenty of trading in the overnight as well. The ES has so far 300, almost 400,000 contracts on the ES in the overnight, and that's pretty good. So that's usually like 100, 150,000. So busy overnight session, and expect more weakness. So I'm going to start off by looking for short setups against that 68.30s, the 45.30s, 40s up to the 50.55s here for rotations down. If they trade below that 50.55s, I'm going to take off that short bias and go back range bound. And looking to buy against support, I mean, there's opportunities against 68.10, 68.05 to 10, the 67.85s, the 67.70s. I would just be less aggressive on those buying opportunities until I see what kind of day we're going to get. So we can get, I mean, we can get a lot of whipsawing back and forth. So I just had to sit down and kind of get a read of the day. But if these things goes as they go now and everything starts into a big nothing burger, one can't quite put up a fight. The overwhelming forces being applied to them, they can't stop the oil from getting through they won't be able to block the Strait of Hormuz. All their the whole playbook is going to get turned upside down. If that happens, which I think it will, maybe some hiccups on the way, but I think they gamed it out pretty well. And the amount of firepower they're applying to these guys, it's not going to take long for them to kind of fold. And they can say whatever they want in terms of being tough. The only thing they can do is like terror attacks at home here, stuff like that. Doesn't mean that they can take pot shots and they can hit stuff. We may already have people killed in the whole thing. So, so we'll see. Nasdaq is going to be the one here, also to the downside. Same story there. They could be close in the range band going into the weekend. The gap down, they took it all the way down here to the 470s, and not quite to that support area, but they were on the way down. Just haven't gotten back up above that 650, 660 area. So this whole area goes from the 620s up to the 700s. If they can trade up above that and get up in this upper range again, so if they can get up above the I would say the London high, this area at the 720s, I think we could be back range bound again. So we'll see how crazy that's going to get. But expect a lot of knee-jerk reactions today, a lot of needless selling, probably not a lot of second guessing and volatility in today's trading. But I would look to sell strength early on against the 670s, 730s, 790s here, 780s for rotations down. This is one level outside the obvious. Above 780, I would go back range bound, and that's assume they're going to be able to trade it back up here again towards the 970s. So not going to worry about the long side. But yeah, there could be buying opportunities against the 600s, the 530s, and the 470s for rotations up. And but again, I'm not going to be very aggressive on that buy side. I'm going to be thinking short side of the market, looking for short opportunities, at least to get started. But if the day turns into one of those like, yeah, okay, it wasn't as bad as we thought, fine, and the market starts rallying, I think it's a little bit early for that. Maybe if that starts happening, yeah, then we start looking for that. But I'm not going to be starting off like that at all. So it's going to be very interesting to see how the market really digests this information. So starting off range bound with a bias to the downside, looking to sell strength to get started. Not going to be very aggressive on the long side until I see something really nice forming or some significant rally developing. But and then we'll be making notes about it. So I think we have a good amount of time up to this up to the London close to figure out what kind of market we're going to get. But then again, it's all about the volatility and what the algos are going to do. And usually they start knee-jerk reaction to the downside, and that's kind of the expectation. And the hard part is going to be if that starts happening, to identify it and then try to get on it without getting all whacked in the volatility back and forth. So I'm going to sit on the sideline a bit, just take it easy, check out what kind of day we're going to get, and then try to assess it from there. On the bond side of things, the bond market is moving a little bit. They've been up here, they gapped up to the 119s. They're right back down to where we started. And right now we'll see if we're going to get this, going to take it lower. I can't really predict how these guys are going to react on the geopolitical conflict. It's not quite up the alley of a fear trade. So it's all about what other interest rates going to do here in light of a conflict. Hard to say. But right now they gapped up, they're back down again. I would start off range bound on the bonds. I would watch in case there's a spike in yields for whatever reason, and bond prices would have to come down. So I would kind of think on the short side on the bonds as well. But I don't really have a good sense for what direction they would go given a geopolitical conflict. So looking to buy weakness against at 118s and 117.22s. Looking to sell strength against the 118.04s, 118.18 here for rotation, 118.16s here for rotations back down again. So that's kind of the dynamic. So 118.22. Sorry, this is 118.16, 118.22, and then the close one is 118.06. So we have above 22. I would definitely lean in on the long side. Below that 22, I would lean in on the short side. But we'll see how these guys are going to develop. Again, I'm going to be a lot less aggressive on trading at all today. Remember, so far we are trading at the 100% margin. So there's no day trading going on right now from a retail community. It's going to be, I haven't even looked what it is. It's huge amounts of money you need to have put on a contract right now. So, and for the micro, it's like $1,000 or like $800 or something like per micro, something like that. It's pretty big. So It's you just kind of sit on the sidelines. Look for an email from AMP if you have an AMP account or your broker, if what kind of margin they've set. But I know for AMP customers, because that's who I'm trading with. But for AMP customers, the margin just went up to 100% in the overnight. And oil, we'll see how that's going to spike. So I'm not trading oil either. That's going to be also a pretty crazy market. So that's where we are, guys. So looking at the overall picture, starting off range bound, slight bias to the downside, or slight biases to the downside to get started. Watching on the ES, I'm watching these areas. If they can trade up above that 68, 50, 55s, be back range bound. On the Nasdaq, if they can get up above this area, the 780s, I'm gonna be back range bound. But I mean, it's been back and forth, and they're kind of showing a little bit of strength. So it's not the overnight is not showing a free for all selling dynamic. It's showing you that it's volatile, but not necessarily straight shot to the downside. But I'm not going to rule out that potential move to the downside when the day session kicks in either. So we will see. So yes, get ready for a lot of volatility, and let's see what kind of day we're going to get, and then we'll adjust it accordingly. All right. Alrighty, guys. Good trading. I'm going to wrap it there. So good trading for today, and trade with a lot of caution. It's likely to get a lot of whipsaws and crazy stuff. So we will see. The best trade I can see in it early on would be a big sell-off and try to get on that sell-off. That would be the initial trade I would look for, but that could be a lot harder to get on than you think. So, alrighty, we'll leave it there. Good trading, guys. I'll see you back at 11:30 for the next update. Later.